What's up? What's up, guys? Hello. Everyone doing good? How's everyone doing today? Hope everyone's having a good day. Hope everyone's having a green day so far. We just chilling. We do a little chilling. We've been doing good so far on the call outs, guys. So let's go. Let's go. I am going to switch to my chart. Let's go GBP. There you go. Okay. Obviously, I know that some of you who pop on, hello, thank you for popping on. Some of you I know are going to pop on, and the style of content that I do, the way I speak, the way I talk about the charts, you're not going to agree with. That's good. It's all good. There are probably hundreds of streamers out there that are doing similar content. You might find someone who's just right for you. But I'm doing this very chilled, trying to master the call outs so that my own trading can be more profitable or more accurate. Like yesterday, we called out the gold trade here. Okay. As you can see, this would have been an amazing trade if you held it. Look at this, right? So if you held this trade at the peak of its there or there, or let's say you went to there, right? That's a 1:6.2. This is a 1:4. Okay. And if you're trading, let's say with a 25K account and you're risking, say, $200 here, 1:6 is 2, 4, 6, 8, 10, 12. That's over $1,000 you would have made with this one call out that we did here. Okay. And I explained to you guys why we were considering this as a actual call out and we weren't just drawing it up on the charts, because it had ticked a bunch of boxes and a couple of them, quite a few of the ducks were in a row, and it just made sense, especially the second retest here. You can see, right? And this is the 5-minute. We actually looked at the 3 minutes. The 3-minute was actually the one that was more convincing. Okay, so this was the OTE level. We pumped up. Okay, we then came down into a fair value gap. 1, 2, 3 green candles. So there was bullish momentum going up from this fair value gap. You could have entered right there. Stop loss below the lows, and you would have had a 1:6 trade if you held it. Okay, if you missed this entry, then the push up with the market structure shift, okay, comes down into a fair value gap again. See how the 1, 2, three candles all respect the fair value gap, right? Green candle pushes up. As your green candle pushes up, you can enter. It's that simple. Stop loss can be further down to the low, or it can be here, guys. I think Khan took this trade and his stop loss was here somewhere. You know? And if he had held throughout the evening and throughout the next day, it would have been even better. But anyway. So that was yesterday's call out, guys. So let's see today. First, let's look and see if there's any news. Okay, so we're going to go to the economic calendar. And let's see if there's any news today so that we know whether to either stay out of the markets or adjust our strategy accordingly. So we have 8:30 is not much. So no real major news today. Okay, so let's look at NASDAQ. Start off by looking at NASDAQ. And what do we always do? We start with the daily. Okay, and you see how this fair value gap got touched. Okay, and then it came down. This could merely be Khan sending me a voice note here. What's happening here?
Battlefield 6 and
Okay, cool, man. Yeah, I'm just on the chart at the moment, just chilling, drawing up the markers for the day, you know, doing top-down analysis. So, like it, man. Enjoy. Have a good one. Okay, so we look at NASDAQ. We see the big fair value gap that it's now coming back into. So previous day high is a very strong draw in liquidity. So if we go down to the 4 hour, it's already drawn it for us because we have the app. Okay, so this line, in my opinion, is going to be hit, right? What happens from there is the important part. Okay, we know that this line is probably going to be hit. So let's see. So from here, if this breaks through, closes above, comes down, tests this line, and starts to move up, we can look for longs. Okay. If it sweeps this liquidity area and starts to reject and inverses a fair value gap, then we can look at shorts. Okay, we don't need to draw the fair value gaps for the 4 hour and the 1 hour. Why? Because we have an indicator here to the right that lets us know exactly where the fair value gaps are. Sometimes they won't let you know where the big ones are over this side because there's only a certain amount of candles on the left. I mean on the right here. So the hourly, this is the current price here. So we got some fair value gaps below, but I guarantee you there's one up here somewhere. There. Okay, so there's a fair value gap here. So what I will do here is I will draw this fair value gap. Okay, this is the hourly. And there's another one up here. Okay. But let it break this first, and then once it breaks this, then we'll know. So I'm going to go our fair value gap. Okay. Let's just make this a bit let's Let's just leave it like that. Okay, so we know that's there. Okay. Um, so this is the key level area here, guys. So that all depends how it's going to react from this level. Okay, we've just carried on going up, right? You see this accumulation area, right? If this candle shoots up and takes a bunch of just above this candle, above this area, and then comes down and inverses a fair value gap like this, then we can look at a short coming down, guys. That is what we call the AMD strategy on the 15-minute time frame. Okay. If you look at the 5 minutes, I would only consider this to be valid if this gets hit, right? So it needs to take this liquidity. Even though there is a bunch of liquidity that it's currently taking, I still need it to come up and take this. Okay, mind you, it could come down and inverse and might work and go all the way down to the bottom. It could do that, but that's not our strategy. AMD, okay, one of the requirements is that it needs to push up and take either a strong internal or an external liquidity, right? That's a requirement for that. Preferably, in a perfect world, we'll see a shoot up into this fair value gap, come down and inverse this. That's the best setup. Because not only are you sweeping liquidity, but you're respecting a fair value gap and a higher time frame fair value gap, and then you're inversing to come down. So if we're looking at that type of setup, we're probably going to look more on the 15. You can see on the 15, it's more cleaner because the 5 is going to create multiple fair value gaps, right? If it has to come up here, it'll create at least 2 more fair value gaps, plus minus. So the less fair value gaps, like on the 15, is better, because then if it inverses the 15, then at least we know. But let's just have a look and see what ES is doing. Is ES... Okay, already I can see a difference here. Okay. See how ES has taken the previous day highs? And NASDAQ hasn't even touched it yet. That changes things a bit. Now, if I had 100 people here, I would ask the question and I'd be like, that's a good question. Why does it change it? Absolutely right. It's because ES has taken the highs already, the previous day highs, that if ES was to now inverse, and let me see this fair value gap. Is there hourly fair value gap? Okay. So ES is in an hourly fair value gap now. Could be hunting this top one. But let's say ES comes down now and does not inverse this fair value gap here, right? Let's look at the 15. Okay, if ES creates a 15-minute fair value gap here, right, comes down and inverses it, we could look at a short for a AMD setup. But also the mere fact that we now broke through the previous day high, retested the previous day high, and are now pushing up, could mean that ES wants to now come up for this fair value gap here, right? And which is the one that we didn't draw up for NASDAQ. Because there is an SMT now, okay? Can you guys see it? Of course you can. Right? That is lower than this, but yet on this one it's higher. So there is a bullish SMT. ES has actually taken enough liquidity. So if NASDAQ was to inverse a fair value gap on the 5 or the 15 that looks really clean, then at least you can look at something like that. Okay, let's look at gold. Like we said, we'll go back to here. So the top down for gold is, we have a fair value gap below, right? So we've taken previous day highs. Yes. We've swept previous day highs, and now I personally think, in my personal opinion, which means nothing, that we could come down and take this fair value gap here and then push up. Let's just look at the 4 hour. Four hours respecting a fair value gap. So we'll see how that plays out. Okay. This wick is a telling story. Okay, it's come down to respect the fair value gap. So now, what do you mean, bro? You can either watch my stream and look at the analysis that I'm talking about. But in a nutshell, NAS and ES could be a potential AMD setup soon. Gold, I think, might come into the daily fair value gap, which means there's going to be shorts. We look for shorts. That's my opinion. Those are the only three I've done so far. But yeah, bro. Okay. Let's look at Euro. Okay. Let's look at the daily reset. Okay, testing the fair value gap again. We push up, sweeping all this liquidity with the high here. We look at the 4 hour. So it is moving down, but it is bouncing off this fair value gap on the daily. And the strong green candle could indicate that we're now reversing to go back up. There is a market structure shift, but it is respecting a fair value gap. So until you break this fair value gap, I think we're still looking at downward movement until you break this. So I would say this 4 hour fair value gap is very key right now. So if you look at the hourly, okay, the hourly came up, respected the 4 hour. Our hourly candle inversed this fair value gap. We then came back up. Okay, so in my opinion, we're going to come down now to test this fair value gap here and see. Okay, Okay, if we were on the charts earlier, we could have looked at maybe taking a short at this level on the 15. But then again, we weren't here, so it's fine. Plus, I don't think that's none of our models anyway. Okay, so okay. Let's look at the 5 minutes. Okay. Okay, guys, so sorry, I can't see the chat. There you go. Right, so now what we are going to do is we are delivering from a higher time frame, and we're going to see previous day high has been taken, but I think we can come down for the previous day low. That's my opinion. AUD USD taking the previous day high. Okay. Bunch of accumulation here. See how it's literally just going sideways, guys. The whole of London has just gone sideways. Okay. It's tapped the previous day high multiple times. Right? So if this one, for example, swept up and went here and then came down, that would be the AMD setup that you would look for. Let's just go back here. Curious, curious, curious. Euro. Okay. Okay. Inverse this. Nothing clear. This is probably the best opportunity so far. But let's look at the 3 minutes. Yeah. So you see how this came up and swept everything? Even if you're unhappy with this, right? You could let it come down, 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 come up, retest this area, and you could have entered like here somewhere. Okay. AUD, bunch of accumulation. I would love to see a big candle up and then inverse coming down. That's what I would like to see. GBP, JPY. Okay. Accumulation, manipulation. Is there a higher time frame fair value gap? I'm sure there is. Of course there is, right? So the hourly fair value gap is there. So perfect manipulation into it. So if you go to the 5, let's come up to retest. Even though everything's bullish, I think I would wait instead of just going short like this when it gets down here again. I think I would wait for a break, a retest, and then go down. But this would need to be here at least at this level because there's a fair value gap here. So if this closed here, let's just see before we actually confirm the call outs. Interesting. 15 minutes, 5 minutes, 3 minutes, 3 minutes for value gap. Don't know if we would take this. See, where it does fit in is that we have accumulation, manipulation up into a hourly fair value gap, sweeping Asia highs, and a bunch of liquidity to the left. Okay. However, 4 hour and hour are bullish. Okay. But I think this would be decent. So if you set like a limit order here, and if it came down into the limit order and triggered your trade, you could do that. I think that would probably be the safest thing to do right now, because your stop loss kind of has to be above the highs there, because, well, very simple, it could come back up and test the fair value gap again. So I think even though we are bullish on the 4 hour and the 1 hour, all this accumulation just got taken into a higher time frame fair value gap, and we have swept Asia highs. So unless we just keep blasting through and just keep going, I think that this is the key pivot point where we will know if we are right or wrong with this specific trade. Okay, we are in a 4 hour fair value gap as well, as you can see, right? So we're respecting a 4 hour fair value gap, we're respecting a 1 hour fair value gap until we inverse this 4 hour and inverse this 1 hour. Then I still think we could come down, because we've gone sideways on London and we went down a little bit, up a bit, so we haven't really had too much volume in the markets. It's just been a bunch of accumulation, right? So if this comes down, you could put a limit order there if you want to. This is not financial advice. This could be completely wrong, and it would be your fault if it is wrong, the same way that if it's right, it's your fault as well. Okay, because everything is your fault. Till you realize that, then you'll say nothing's my fault. Right now, you should not be in a trade. If this shoots down and you put a limit order, then great. If this shoots down and you don't put a limit order and you just sort of like, and you miss the trade, then so be it. Maybe I should trade a demo account when I do this. Paper trade. Connect. Got it. Amount. So that you guys can actually see. Paper trade. How do I reset this amount again? I'm in profit at the. I'll just stick to 100k accounts. Who cares? I'm in profit from my previous when I was paper trading before. Yeah, let's do some paper trading. Who cares? And for those that actually get into my comments and go, oh, but you paper trading. Yes, I'm paper trading. We're focusing on callouts and we're focusing on trying to perfect the strategy or the strategies without risking anything crazy. So yes, I, like you guys, should be paper trading. So if I go limit, it'll be sell limit. What am I doing? This looks interesting. Everything's bullish and there's a market structure shift. It's respecting the fair value gap. So unless it comes and inverses this, I don't think that this is valid. We're in a 4 hour and a 1 hour. Actually, you know what? Let's just put it in just for the sake of putting it in. Wait, why is it market entered? It better not have entered me in. Did it market me? Ugh, I hate this. I should not be in this trade. It has not inversed yet. Oh well, let's just see. Let's just see. The indicator is telling me to put a long in. Okay. Maybe I should just follow the indicator and see if it's right or wrong. I should not be in this trade right now, guys. I tried to put a limit order and for some reason the market entered me in, and I don't know why. So if it loses, it's because of that. Some stupid reason, I don't know why. I have no idea why it entered me into this. The indicator that I'm using is everything screaming bullish at me. It even gave me the entry to go long. So we are going against the indicator right now. We could just enter now and put a stop loss below and follow the indicator to the take profit up here. But I have a bit of a hunch, so we'll see. Again, I should not be in this trade right now, guys, because as you can see, that's the entry that I was looking for, and it market entered me into a trade here for some reason. So yeah, interesting times. But it is a paper trade, so I don't really care. If ES did not take the previous day high, then you could look at a long here for up here and up here. You could take the long now because it's respecting the fair value gap. You take the long, stop loss at break even at previous day highs, and then you target this area, this 1 hour fair value gap. If ES did not take previous day highs, this was a silly little trade that should not be in right now, but we'll see. I guess we got to put it here, which made no sense. Oh well. Probably more like this. I don't know. There, something like that. I could just cut it now and just accept that it was a stupid little mistake error, but we'll see. But I wonder why it triggered me into the trade. I do want to know that. Market open now, guys, for forex. So let's see. Well, it's actually been open for a little while now, but volume hasn't come in. Even if this is a winning trade, guys, the entry was not good because we entered a bit too soon. Technically, we should have only entered. We shouldn't have even been in this trade up until now. This is where we should have entered. Probably up here somewhere. Does everyone know why we would have entered this short? Yes or no? Whoever's in chat. Well, other than it saying bullish, bullish, and actually the indicator telling us to take longs, other than that, okay, is that we swept Asia highs to the left. We swept a bunch of liquidity, and we are respecting a higher time frame fair value gap, okay, which is up here. This is an hourly fair value gap. Sorry, a 4-hour fair value gap. What am I saying? Right. So I think it's a 4-hour fair value gap. Yeah. So we came up into the middle of the fair value gap, and now we are respecting it on the way down. We accumulated, we pushed up, created a fair value gap here, inversed it, we even came back up, retest, and now we going to most probably we need to inverse this 3 minutes. Okay, that will hold us up a bit. So in 10 seconds, if this does not inverse in 10 seconds, I could actually consider closing this. It needs to inverse. That's a technical close, which is a technical inverse. So that's just enough to keep us in this trade, I would say. Well, into this demo trade. 2 minutes. Is there inverse? Not really. 1 minute. Is there inverse? Almost. So on the smaller time frames, we have a bit of a struggle. The 5 minutes is clear. Okay. 5 minutes is very clear, even though there is a small fair value gap that we have not yet inversed. But this strong inverse here, and the 15, let's just see the 15. So the 15 closes in 11 minutes, but we'll see. Anyway, so that was my thought process when it comes to this call out, guys. With Nasdaq, the volume has died right down. With gold is difficult because it is accumulating. Euro accumulating. AUD, this could have been really clearer, but it's just going sideways. Everything is just going sideways, guys. So if this 5 minute does not inverse in 18 seconds, we close the trade. Look how this rejection is happening. It's probably on the 3, on the 2. Yeah. There's a 5 minute fair value gap here. I don't like that. I don't like that we aren't inversing the 5 minute. So if you did enter this, then you could actually exit here at break even. I'm just going to leave it because it's a paper trade and because we followed our rules, and it said basically the rules are that I would say out of the 6 ducks in a row, this is 4 of them. This is not an A plus setup, just so you know. I would say this is a B plus because I would have preferred this to be external liquidity that we sweep, and I would have preferred it to be previous day high, previous day low, you know, that type of thing. And I would have preferred the actual indicator to say bearish instead of bullish. So the mere fact that we're respecting this small fair value gap could mean that we will get cooked in this trade. That needs to be inversed. I'm leaving it alone because it is a demo account and I just don't care. As I said, I'm doing this to practice. I'm doing this to hone my skills. So that is the purpose of this. And if I have to use a demo account to do that, then so be it. So if you want to learn and grow on this journey with me and just come along for the ride, more than welcome to. Everything just looks bullish right now, so I actually might, yeah, I don't know. Look at this reaction candle here. Look at this hourly candle. Look at the 4-hour. That's what's keeping me in this trade right now, guys, is the fact that this candle wick and this candle wick are so big right now. It means that sellers could come in, step in because of this candle wick. Okay. Once again, I could be completely wrong. And since there's no fair value gap on the hourly, okay, then you would target the lows down here. And if that's the case, that'll be a decent trade. Same with this. There's no fair value gaps here. So you would target right at the lows there, which is previous day low. So on paper, this trade looks like it should work on paper, okay? So all the elements are there of this trade actually working. Whether it does or it doesn't is now up to the trading gods. Okay, there's a strong push down for AUD. So this could either be a AMD setup, or we can look for the mere fact that it took previous day highs and it's just going to hunt lower, which is fine. Gold, $8.50. See, guys, if this fair value gap was not here, this, I think it's a 4-hour. Yeah. No, it's not. It's an hour. See how we're inside a 4-hour fair value gap? And then we've got the hourly fair value gap here. If this fair value gap was not here, this trade would not, I would not be in this trade for this paper trade. However, you see above us, there's a bunch of fair value gaps and liquidity above. There's absolutely no reason why this has to come down. It could just continue up. It really could. Just kind of stalling. Up to you, bro. I don't know. If I look at the 15, look at the 3. I don't know, bro. Angazi. Are we? Oh, me? Are we? I said to me. Oh, it's looking juicy, so totally up to you, bro. 4 hours bullish, hours bullish. There's a lot of bullish elements to this, so totally up to you. Lonely, out of we. See, also, guys, this is what happens with it's you'll see on my thumbnail on the bottom right hand corner. It's called the opposite strategy. So if I put in a paper trade and you put in the opposite, okay, so your opposite would be here. It would be the long. Your stop loss will be like here, for example, and you can then take it all the way up. This is called the opposite strategy, okay? Which means if I take this trade, or if I'm entering this trade, and you enter in the opposite direction, the odds of you winning is pretty high. So some people try the opposite strategy and they've been successful at it. Because when it comes to call outs, guys, we've been, like, I've done green days for a week and a half, maybe 2 weeks now. Mostly green days. So the call outs are great, right? Amazing call outs, like yesterday. The problem is not the call outs. So my problem is that I'll give you guys, let's say, 5 call outs a day. All right? 4 of them will be great, or 3 of them will be amazing. And let's just say one of them is the one that should not have been taken. Okay? If I take a trade, it'll be that one that has not been, that one call out or that one trade that should not be taken is the one that I will choose. So that is the biggest issue that I have right now, is that I can identify when a trade is going to happen, or even like the who's sending me a voice note here? So like this looks like it's going to go up. Black command, take it. Okay. Whatever happens here, happens here. We don't care at this point. It'll be interesting with market open at 9:30. You see, when there's so many bullish signs, it's so hard. Like price, you can see price is struggling right now. Okay, price is really struggling to pick a direction because on paper it's clear to me. Okay, on paper, but in practice, you can never predict what the markets are going to do. So anyway, opposite strategy is this. So you would then have entered into a long. Opposite strat. Okay. Because remember what I said, the indicator said we must take a long. So the opposite strat would have been the indicator basically going for it. Okay. All these candles here are not leaving me with any confidence that this is actually going to come down. Because it's so indecisive. It doesn't know what it wants to do. It keeps bouncing off a fair value gap. If I go to the 3, that's just not comforting to know at all. 2-minute fair value gap has been respected multiple times. Same with the 1 minute, I think. It's been respected multiple times. Like, at this point, it's more like a 50-50 trade right now. So, I'm just leaving it up for shits and giggles. It's a demo account, guys, so don't get too excited. Don't get your horses in a knot. Change the field of view. Okay, so this trade is not looking too good right now because of the way this candle closed. And these 3 candles, basically, they closed bullish, but with nice big bottom wicks. So this trade, I think if it goes to break even, I might just close it. Or close to break even. Because I do not think that we are going to shoot down in the way that I thought. So for the opposite strategy, guys, that are doing this strategy, it's probably looking even better for you guys. Price action is terrible today. Remember, guys, we initially got in a bit early on this trade for some reason, so oh well. We'll see how that plays out. On this specific trading profit, or this paper trading account, up to almost 2,500. So if we lose, we lose. Who cares? See how you should always wait for the inverse, guys. The inverse on the 5 minutes would have been the more clearer way forward. This is why we lost this particular entry. Okay, so we'll start off the day with a losing trade because of the small 5 minute fair value gap. So the opposite strategy wins again, I think, in this case. So you guys are going to target the previous day highs. So this is just a continuation, I guess. So it's not going to be a reversal. Okay, okay. Interesting. I don't like this price action, even if it inverses this fair value gap. I don't like the way the price action is, so I might not even try and just go for that one. It's the same as ES. Okay. Okay, so the first actual attempt, even though it was an early attempt that we didn't want, still got in. And it's a attempt for the opposite strategy people that basically do the opposite to me in every trade that I draw up. So if I draw up an actual trade, then they enter the opposite direction with the stop loss above any lows where it's safe enough. And then stuff like this happens. See, I went against the higher time frame bias, which is bullish. So that's why this trade, if it doesn't work, that's one of the reasons. So we have to reflect. Another reason is this fair value gap here was not inversed. In fact, it was respected. So until that inverses, we aren't going anywhere. Doesn't look like we're going anywhere. Gold on the 5 minute here could potentially be along. The problem is that you've got these fair value gaps to the left that could hold it up. So you could potentially wait for this 15 minutes here to be inversed in 3 minutes. It's respecting a fair value gap to the left, right? So if you see this, okay, this is a fair value gap on the 15. It's respecting, is that previous day low highs? Previous day highs, yeah. accumulation area, manipulation down into a fair value gap at previous day high level. Okay, comes up, inverses this in a couple minutes, you know, then we could potentially look at something maybe on the retest. But we, I said do. Let's see. Surprised with ES and NASDAQ. They're just stalling. Euro probably respecting a higher time frame. Is Euro? Yes, it is. Haha. Okay, so there should be no doubt at the moment that this is going to eventually run the stop loss. So the opposite strategy seems to be a complete win, guys. Okay. So yeah, guys, the first call out, I guess, is not going to be a successful one unless we hang on until 9:30, and 9:30 everything just dumps. So we broke the London lows, and now we've retested a fair value gap. Okay, so that would be your basically your entry, right? Now you could wait for a retest, right? So let's say you did this. Okay, you wait for a retest, stop loss below the lows. So I think that would probably be a safer route if you were going to take longs, or you could have just entered straight away. Let's see this one instead, and let's see if this one's better. Let's look for a little retest, see if we get it or not. On paper, this trade made sense. The only problem is that we had a very bullish higher time frames. So yeah, not ideal. messing around a little bit. Right, I really do need to design a going live at the moment on Kick and YouTube. Story, not story, but like, what are those things? Yeah, story for Instagram and for TikTok. Let me actually quickly do that while I have you guys here. So that'll be story. Instagram story, yes. Design. Live streaming on Kick and YouTube. With Hacking King 35. Copy. No man. Copy. Templates. Category. Story. Yeah. Yeah, let's just why does it keep um Do, 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 do. Let's look at, oh, this trade is actually working. Who would have thought? Damn, I should have actually... Why didn't I actually connect? So we go stop loss, take profit. Okay, we messed that up. Shouldn't have done that. Yeah, we sort of messed that up a bit. Risked way too much. Discard. Yeah, we messed that up. That's what I really wanted to do. But then we risked way too much. I wasn't watching. I was trying to do a what you call it, Instagram story on canva.com, and this candle down on the retest back up, so this would have been the entry here, not up here. So, oh well, we're risking a lot on this one, but we'll see. Is it going to pay off or not? Why did we do this, guys? Okay, because it ticked a couple of boxes and a couple of ducks were in a row. One was we have a fair value gap here, right? We have a rejection here, right? So if you look at, let's break this down. Okay, I know this might not make a lot of sense. So you go from there to there. Okay, it came down, hit this level, and then shot up. So if you go, let's just go there, same thing. Okay, so already we have the fib level confirming that we should go up. And then we come down, right, into the fair value gap again, right? So we, after accumulating, we come down, we leave a fair value gap, we inverse the fair value gap, and now we're looking at going up. Hello, what is this?
The whole piece with sugar.
This is crazy.
Oh, it's lovely. What's crazy about it?
A lot of sugar.
Well, just taste it and see. It's a waste. Making potato bake, you know.
I accidentally entered a lot more than I would want to. I did it. I'm doing a demo account. We'll see. I could exit now and re-enter, but maybe I should. Oh, well, doesn't matter. I'm in. And then I'm in another trade as well that's working.
Yes.
So that's 2 trades now on this demo account. So we're up 460 on the one, and we're up $70 on the other. That's the fair value gap that we look for, guys. Right there. Templates, 15 minutes. Inversed above the 15 after accumulating, manipulating, pushed up, inversed, and we took a shot. So this should go up here because it's probably more appropriate. Our entry was not exactly where we should have entered, but oh well. You actually like that? A bowl of mulberries
Some sugar.
with a little bit of sugar sprinkled over it.
What's wrong with that?
If it was like caster sugar, like powdered sugar, that might be a little bit different, but that just having the sugar texture, or like a little honey, a little bit of honey, then maybe that would be nice. But just to sprinkle sugar is a little bit weird.
Well, can I put it in a frying pan and just melt the sugar?
You could. Okay, so now both our trades are technically working. Well, the one is almost about to go.
It's streaming.
Yeah. Okay, so the opposite strategy would not have worked. Seems like it. Okay, let's just get rid of it. I hope if anybody's watching this, I hope they know why I'm entering into these trades. If you like, this is why I can't wait to stream to like hundreds of people. And you know, because when I enter into these trades and they win like this, then I can literally explain to them why.
Nice.
You know, because
you know what you're doing.
It's very important for people to understand why. Forget the amount here. That doesn't matter. Market open. Let's see. Now here, on this one, I could go to break even. It's a bit too soon. So I'm going to leave it for now. Volume is coming in the markets. Let's see if we get a push up for gold. And if we get GBP, JPY, a push down. We are targeting previous day lows for GBP, JPY. Right. Also, I have to watch GBP, JPY because this could be manipulation down, creating a fair value gap for a long to go up. So I have to be aware of that. Do you still want to go to later? I need the keys though. So if you see sign, I need my keys.
Just trying to fix the kids at 2.
Oh, it's 3:30, so.
Oh, okay. I think she left them up there. I'll search them.
Nasdaq is about to inverse. 3 minutes. So we're looking at an interesting dilemma here. Okay, gold could come down and wreck us. And if it does, it'll be a 5,800 loss. A lot more than I wanted to risk onto this trade. I was only going to risk 1,000. It's a 100k account, so I was only going to risk 1,000. But it entered me. I don't know why it entered so much. But anyway. So this is why we have to keep our eyes on GBP JPYs, because you can see a bounce. It swept liquidity and now it's bouncing up. So you could have been at break even and you could have covered your risk here. Me, I'm leaving it because it's a paper trade. I don't care if I lose. Still think we could get a push up for gold. That's just my opinion. GBP, let's look on the smaller time frames. The smaller time frames are slowly starting to push bullish, which would mean that we could be cutting this trade soon. But nah. It's bearish on the higher time frames. Let's see what happens. We're in it, and we're gonna see. I just take the mints out.
No.
I don't know. No.
I made potato bake.
Yeah.
Cheese and potato. Cheese sauce. And then I've made, it's just an oven at the moment. And then we can have salad and have sausage meat.
Oh, okay. I thought you were doing the
I
other thing.
was going to do that, but that's not what we decided yesterday. I forgot about that. Only when I looked at my it's supposed to take that.
It's okay. So good. Did you just take the one pack?
Yeah.
Oh.
That sounds nice. Do the other things right.
Okay.
Ooh.
Yeah, while I'm looking at that, I'm gonna look at oh, this looks so cool. that. What is this? Crazy.
Rain tonight. You come over.
Just trying to design this quickly. Oh, let's look at these trades. I wasn't even on the charts looking, guys. Wow, we got a rejection there. Okay. Okay, that's decent, I guess. Hope everyone's doing great today. So far, the trades are working out. Yes, this is a demo account, so don't get too excited. I'm not getting too excited. We entered into this gold trade because it inversed this 15-minute. It respected a 15-minute fair value gap. Inverse this one after accumulation. So we're going to target these highs at the top here. We're going to go to break even here. Okay. So probably around this area here will be a break even mark if we get there. And then the 1:3 is, I think, here somewhere. 1:3. There. Go. Let's see if it plays out, guys. Let's see if it plays out. If it doesn't, it doesn't. We lose this amount, 5,800. It is what it is. GBP JPY has been playing games. It's stalling, but I still think that this could come down. We have a hourly fair value gap here, so this will be an area of interest. We have, sorry, no, we don't. We have clear space all the way down. Even here, we have clear space all the way down. So above there's fair value gaps. I think this possibly could come down a bit more. In my opinion, not financial advice. Please understand that, okay? This could come up and wreck me up here. It's not a problem. This is a demo account. I don't care. You have to trade like that. Like, this is fine. If you lose, it doesn't matter. This looks really good for gold. I like these wicks over here at the bottom. It means that it came down. Buyers came in and said, no, we're not letting you get past this fair value gap. I like that. We risked a lot more than we should have. Okay. Instead of drawing it up, I just pushed buy just because we're doing a demo. So if this loses, it's a lot more than I would have typically risked on an account like this. But it doesn't matter, guys. This one seems really good. Let me go back to trying to design a live story. Effects. Okay. Live stream. Edit. YouTube. YouTube. We go. Color. Red. Yes. Duplicate. Undo. There. Kick. Change color. Green. Duplicate. Where's the and sign? And okay. YouTube and kick. Join now. Live now. How are we looking on the charts, guys? Let's see. Oh, wow. That's going well. How's gold looking? Not too good. It's okay. It'd be funny if we lose gold and we win GPP JPY. That makes up for all the losses of gold. That'll be funny. Hopefully gold's got some legs up. Almost. I think we could possibly go to break even here. Yeah, confirm. Confirm. What's going on here? Confirm. It's not letting me go to break even. There. Confirm. There you go. Okay. Okay, so now that's a risk-free trade. Hopefully we can do the same thing with gold when it gets up here. Hopefully it gets up there. And yes, for those that are looking and thinking, is this a demo account? Yes, it is a demo account. It's a 100K demo account that I used to trade with a long time ago. And I thought while I do call outs to hone my skills and to help you guys out, I am going to demo trade as well, just for shits and giggles. Okay. Position, center, center, center. Download, download. Sorry guys, I'm just on I'm not even on the charts right now. I'm just sort of like I can see it on the other screen. I'm gonna go on to I need to email this to myself. Google image Gmail. I need to email this to me. Yes. Send. Send. Okay, guys, let's look at the charts again. Okay, so gold technically is looking good. GBP is hopefully not going to stop us out at break even. Let's just move it up a bit there. Just in case. So hopefully that's risk-free. I'll forget about it. I don't care now. If GBP works, it works. As long as you guys understand why it worked. And as long as you guys understand why I drew this up and took it. Okay. There's an hourly fair value gap above. It accumulated, manipulated into that fair value gap. It created this fair value gap here, which then inversed, okay? And the only thing that it did, there was a small 5-minute fair value gap here. So that was the risky part. But I thought, let's do it. It's fine. So We respected a higher time frame fair value gap. We took Asia highs. We left the fair value gap, accumulation, manipulation, inversion, and now it even came back up to retest that area and then started to dump down. So your entry is up to you. You can enter here. You can wait for the retest, enter. It's entirely up to you. Gold, we respected a, you see this big wick? Firstly, this wick is what really drove me to this trade, okay? This big wick at 515 meant that buyers really didn't want to get below this level, okay? So when a 15-minute fair value gap formed here, and it got respected once, and it got respected twice, I said to myself, okay, there's accumulation before that of a fair value gap that got respected. It came down, created a fair value gap here, respected the 15 for the second time, and then started to push up, and it inversed it. Now, whatever happens at after this point, whether it's going to go up or down, doesn't really matter, because the criteria has been met. In an idealistic perfect world, this will be external liquidity that it's respecting inside a fair value gap. So this is not an A plus setup. This is like a B plus in my books. Okay. This one again is an A setup, I would say, because we're respecting a higher time frame fair value gap. The only problem is that we didn't close far enough, so that's why it's not A plus, and it's not A plus plus because this for hourly fair value gap, if it was external liquidity like up here, if this was the area where we were taking the, like the hourly fair value gap was here running through this area, then it would be A plus plus. So there's a lot of reasons why this either might work, might not work, but that's a B plus setup is gold. A setup is GBP JPY. So this just shows that you can still take A setups, and you can still take B plus setups if this works. Okay. If you're a 1-to-1 trader, you would already be out this trade because this is, I think, 1-to-1. So this is already a W trade because we at break even, and the 1-to-1 traders would have taken their money already and been happy with it. Okay. So this is already a win, guys, regardless of what happens. Okay, so that's good. Secondly, all these candles that are rejecting here is a good sign. But we can't just get cocky and say, because that's a good sign, that we expect it to go up. No, no, no. There's so much liquidity below. Look at this, all right? We can't predict the markets. We can just read and react from what we are seeing. And from what I am seeing, the next fair value gap is this one here. Okay. So if it gets up to this point, then I can go break even. That's my opinion. Copy. How do I add a button on there? How do you add a... Interesting. How do you add... How do you make your... Does anybody know here how you make your story so that if they click on it, it takes you to the live? So is there a join now button? A caption. I guess I could do that. Share. A story. TikTok. Post. Story. We missed this. Damn. This would have been a good trade. Accumulation, manipulation, invert. Yeah, dun 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 dun. Yeah. There goes gold. Keep going, gold. Okay, so this was the 1 minute that we could have looked at here, guys. There, and as it came back down, could have entered there. Stop at the bodies. Damn, I missed it. I was looking at gold, I was looking at GPP. I was not looking at NASDAQ. Interesting. Boom, guys. That's how we do it right there. That's how we do it. little bit more, and I go to break even. Right now, this at least gets halfway. Confirm. So we don't risk as much. My market stopped out at break even. It's okay. I'm gonna push this to break even, guys, because it's a lot. $3,200. So I don't really want to risk it. Even though this is a demo. Doesn't matter. There you go. Thank you for the follow. Appreciate it. So both trades are at break even. We missed this one. Oh, this was clean. Fair value gap here, respected from. I can't believe we weren't watching. We would have taken the retracement down. Dun dun dun. Done, dusted. Damn, we missed this one. 1 to 3 would have been here, which would have been in and out already. We had a fair value gap above previous day high. If we were focusing, we could have taken that. But we were already in 2 other trades, guys. 2 other trades. This one will probably take me out at break even. So I'm going to push that to break even. Boom, there. Let's just go plus 19. It'll probably take us out to break even, which is okay. There you go. So this one was a break even trade. Gold. Gold is going to decide whether it breaks through this 15 minutes or not. So if it closes in 5 minutes above there, then we can, yeah. We could just go 1-to-1. So around here. Boom. Yes, look at this. Look at this. Look at this, guys. Here's a 1-to-3 that would have been so easy to take. We formed the fair value gap after sweeping liquidity, respecting a fair value gap to the left on the 5 minutes, inversing it quite strongly. Target for break even would have been there. So you enter here, break even when it gets here, target the previous day highs, which is where it is. It passed, and then you just keep trailing your stop loss to there. By now you'd be out the trade. So easy, this one. Unfortunately, we did not see this live because we were focusing on our gold trade. We were focusing on our GBP JPY break even trade. Okay, so let's just put this here. Break even trade. Okay. So we have a break even trade. We could have taken, this was actually a win for whoever took this, who takes a 1-to-1. This would have been a W. Okay. But we will say break even because our trade went to break even. $6,000, guys. On a 100K account, $6,000. So that's what, 6%? %6 is actually quite a bit, so I might actually close this out to be fair, or trail my stop to like here at 5,000. I think that's what I'm going to do. Trail my stop to 5, so that's a 5% increase for the day on this account. I'm more than happy with that. It is a demo account, as you can see. So It'll be a $5,000 gain. More than happy with that. Not interested any other way. I would do this especially if I entered with live funds. I would do this because there's no way I would miss out on a $5,000 gain. No ways. There's all the signs that this is going to go up to this $19,000 gain. But I just, at this point, I don't care. $5,000 is $5,000. And if I did not enter with this amount, then I probably would have not done this. I would have stayed at break even and just let it ride up. Why am I still in this trade? 4,200. It should have been 5. I don't understand that, but anyway. 4%. 4%. So that's basically, that would have been the same as a 1:4 trade. Because I would have risked about $1,000, which is 1%. Typically, right? So you should risk about 0.5% of your account or 1% of your account. Those are the two amounts that you should risk. Now, if you obviously know what you're doing and you know exactly what's cutting and you know that your trades are going to be epic, then let's just say that's a 1-to-1 trade. Okay. Then you can do 2%, 3%, all the way up to 5%. I accidentally added a 5% trade with this. It wasn't intentional. So when it did go almost 1-to-1, I said, nah, that's a 4% gain in terms of finance, in terms of the amount. So I was okay with that. So we made, on this account, we made just under 5, I'd say, yeah, what's it, 4,000 sub change. So yeah, we plus 7,300 for this account. So we up 7.3% on this 100K account. That's a decent day, guys. Very decent day. Unfortunately, we missed. If we were not in these trades, we would have definitely caught this 1 minute here. I'm pretty sure I would have taken this. So this would have been a winning trade. So overall, a very good day today, guys. A very good day today. Yesterday wasn't that great. There wasn't too much happening. Price action for me wasn't the best. Okay, so we weren't red or anything. We called out the one trade, which is gold. As far as I know, it was the only one, and that would have made you a crazy amount if you took it. So what I would suggest, guys, and I'm going to go through this again, okay? I would suggest, if you're learning how to trade, if you want to learn how to trade, then you look at whoever you want to as a streamer. You open up a demo account on TradingView. You make sure that you set up your TradingView according to how you want to trade, or how that person says that you need to look at your TradingView and trade. A lot of people will look at my chart here and say, this is too busy. There's too much happening on your chart. There's too much clutter. There's too many lines. There's too many, like, why is this indicator here? It's unnecessary, you know? Things like that. But it makes sense to me. As long as it makes sense to you, and you can consistently call out trades that end up working, then great. So let me just put your another green day. Another green day. 2 trades done. 1 win and 1 break even. Let's go. Okay, so the reason why I'm doing the paper trades and I'm not just calling out trades like I'll be doing this the whole week, okay, is because, you know, a friend of mine pointed out, it's like, why don't you just paper trade instead of just doing call outs? So I said, okay, well, if that makes you guys feel better because I'm actually putting the trade in with you, then so be it. And we're gonna keep doing this, guys, until I have a record that I'm comfortable with. Although last week was completely green, so we had a green week. The previous week as well, for a couple days we were green. So overall, when we started doing the call outs, we have literally been green. So let's see if we can make this week green as well. At the moment, we've traded for 2 days. We've had 1 call out yesterday, which would have been a green day for you. Okay. Today, there's been 2 trades. You would have had a green day if you took those trades. And NASDAQ here, if we didn't take those trades, you would have seen this and it would have been green. Okay. So far we are doing good. We are on the right track. We are calling out trades that we think are decent setups. And again, guys, until I feel comfortable enough, because I'm solidly convinced that for some reason, whenever I trade my live accounts and stuff like that, that no matter what happens, I always catch the wrong trades. That's the whole reason why the opposite strategy was formed. Okay. So that is why I am putting all that on hold right now. And I am focusing solely on doing call outs with you guys, streaming while I'm doing it so that it holds me accountable, and perfecting these 3 strategies so that when I start actually trading live again, I will be able to apply all this stuff and it will start working. Like today, for example, I think adding the demo account into it, we're going to stick with the 100K account. Okay, we'll leave it there at 100K. And I still think that this could go 1 to 3 up here. And if it does, it would have been 19K. All right. But I'm okay with 4,000. I think it was 4,200, it said. Count history. 4,800, sorry. Why did it show 4,200? Anyway. So, okay, so overall we 7% up. If by the end of the week we 10%, I'm happy. When we can get consistent 10% weeks, because that's what I want, guys. I want a 10% week consistently. You know? So if I can get a consistent 10% week for the next few weeks, then we'll switch to live accounts, we'll switch to trading properly, because now we have proved that we can do 10% weeks. So yeah. So I hope you guys saw this trade. I hope you guys saw this NASDAQ trade. And I hope you guys are doing very well and you guys are willing to sit, learn, listen, and ask questions. Because even the days like today where I'm correct, I'm right, I put the trade in, it looks good, it looks easy. There are so many things that if you had to do this on your own, you will definitely, psychology will get involved, everything will get involved. And I know. The thing is, like, I said this for so long that I'm not like that. It'll never catch me. There's no way that I'm not going to be self-disciplined. I have control. But as soon as you start, it's like a video I saw the other day with Lewis. He basically broke down, and it makes so much sense. When it comes to trading, you are meant to fail. Now let me say that one more time. You are meant to fail. Everything has been designed for you to fail. What I mean by that is that when you lose a trade, your instinct and your self-preservation is to try and trade again, meaning revenge trade, to make up for the loss, or to try quickly find another setup so that you don't end the day on a red day. Okay? Whereas you have to have the opposite mindset, where if you lose, you take a step back, you take a deep breath, and if nothing presents itself for the rest of the day, then you accept that you have a red day. If you can't accept that you have a red day and that you must trade now to make it a green day, then that's the trap I fell in. I can't even tell you how many times I fell into that trap. I've lost count. So if you cannot accept that you are going to have losing days, then it is going to be one of the most painful experiences you will ever feel. And I'm not talking about physical pain. I'm talking about you will fight with yourself, you will battle with yourself, and you will literally drive yourself a little bit insane. Okay? I won't get into the whole emotional crazy stuff that I've had to deal with. And the people around you will suffer because your friend that's trying to help you trade will suffer because you will put him or her under verbal abuse. Like you will say things you didn't mean. You will stress them out because you are now in a red day and you can't handle it, or whatever the story is, right? People around you are going to suffer because your mental health in regards to your psychology, you'll lash out with people. It's going to happen, guys. And if you can't accept that, then that is a huge problem and you need to find a way to get through that. The psychology is so important when it comes to trading and is probably the hardest thing you have to do. The technical analysis is actually not the hardest part, guys. Understanding a strategy is not actually the hardest part. It is knowing when to place the trade, how to place the trade, and when to cut the trade, or when to just leave the trade alone and just let it play out. Some of those things I still struggle with to this day. which is why I started this journey, so that I can hold myself accountable to you guys, so I can actually trade in a way that I'm not just using whenever I feel like trading, I trade. I know that I have to sit in front of the computer at set times every day, and I need to stick to certain rules because I'm telling you guys what rules I'm doing. So, and I'm literally when I do live trade, you'll be able to see everything on the screen, and you'll be able to judge me. You'll be able to say to me, why did you enter that trade? It broke the rules. Why are you in this trade? It's all your ducks are not in a row. You spoke about all your ducks needing to be in a row, and yet you've entered into this trade and all your ducks are not in a row. You see what I mean? I now have people judging me based on my trading style. And for me, I think that is the best way for me to grow and go forward, because I've done it myself without having any repercussions or any oversight. And I think for me going forward, personally, I would love to have oversight. That's why I don't care if people use me as a signal or use me as a how to enter trades. The only thing is that if you just copy what I'm doing without understanding what I'm doing, because I don't care if you copy it, okay, as long as you understand it. Because the day that I'm sick, or maybe I take a break for a month, whatever the story is, if you're not able to then carry on from there and see what I'm seeing when I'm not looking at the screen or I'm not streaming live, then long term you're going to fail. Because then you're going to just take trades because you think maybe that I'll be in this trade or not. And that's not me trying to act big, toot my own horn. That's just me being realistic. I'm going to get into a smooth pattern, a smooth flow, a smooth regiment, and I'm eventually going to be doing the same thing every day at a certain time on repeat. And if we see a trade, we see a trade. If we don't, we don't. Then that day there's going to be no trades. That's how I eventually want to be. And as I become profitable and I'm earning a certain amount and all of you will be able to see it live. So the entire journey is going to be broadcast live on Kick and YouTube. So that's the point, that's the purpose of doing this. Right now, I'm doing call outs and I'm going to trade on my demo account. Okay. For the last week and a half or 2 weeks, I would say, I'd been doing just call outs. Meaning I'd draw it on the charts, talk about the trade, but not actually take the trade. And we've been profitable based on the call outs. Okay. Going forward, so that there's no confusion, because the other day there was confusion where somebody thought I was actually in the trade, but I had just drawn up the direction that I wanted the trade to go. So going forward, unless I place a paper trade, then I am not in the trade, if that makes sense. So I hope that clarifies it going forward. And doing the paper trade will actually keep us in a position where we can judge, are we making 10%? I'll be happy with between 5 and 10% a week. That's my goal, between 5 and 10%. Right? At the moment, we're itching on that 5%. Because you can't really count the $2,500 that were in there before. Because yeah, anyway. So yeah, guys, gold might retrace into this fair value gap. It has inversed this fair value gap here, so there are definitely signs that this is still going to go up. All right, but we are at all-time highs, guys, so be very careful. If you were at break even, leave it there. That would be my advice. Leave it at break even. Maybe take partials. Entirely up to you. This trade here, typical. It took us out and then came back down. It has inversed the 5-minute here. Okay, so if it respects this fair value gap here and a red candle starts to form, then you can look at maybe taking a short. You know, so it'll be something looking like this. There, stop above there, and you would then target down here. So now you're targeting what's this previous day low? Almost equal lows. I'm about to end the stream, guys, so this would be something I'd keep an eye on here. I'm going to leave this open. I'm not in this trade, but I'm going to leave this like this so that it could trigger whoever's trying to get in, and then we'll see if that actually plays out or not. Gold, there's a fair value gap here that it could respect, and it could end up doing this pathing, so it could go like this, and then this. Okay, otherwise it's going to inverse this fair value gap, and then it's going to work its way down. So let's see if that happens. This, enter, could come up a little bit, down. That's what I could expect from that. Because it inversed, it respected, and it's now forming a red candle. So if it closes in 3 minutes and 20 seconds, red here somewhere, then you could potentially enter this. Could. Again, not financial advice. And then wait for it to form and just start dumping. That's what could happen here. Okay. Yeah, we missed. I can't believe we missed this one. Anyway, guys, thank you so much for the stream. Another W stream, another green day. And hopefully when we start trading live again, we'll have a lot more of these days. Thank you so much for your time. I do appreciate it. And you guys have an amazing day today. Going forward, take care. Have a great one.